Mortgage rate dropped, the largest drop since 1981. What happened? Why? What does it mean for you? What could happen to home buyers and real estate market? That's what we're gonna talk about today.
Mortgage rates fell sharply for the week of November 10, 2022 after a slew of economic reports suggested inflation might finally be easing. The 30-year fixed-rate mortgage averaged 6.61% in the week ending November 17, down from 7.08% the previous week, the biggest weekly drop since 1981, according to Freddie Mac. Yet the rate is still more than double where it was in early 2022. A year ago, 30-year fixed rates were 3.10%. Mortgage rates have risen for most of 2022, spurred by the Federal Reserve's unprecedented campaign to raise interest rates to curb runaway inflation. Two major inflation reports were released during the week of November 10. The Consumer Price Index and the Producer Price Index showed that prices rose more slowly than expected in October, suggesting that inflation is moving in the right direction and may even have peaked. As a result, bond yields fell sharply and mortgage rates followed, trailing slightly behind the 10-year Treasury yield. In turn, stocks of home builders such as Lennar, D.R. Horton and Pulte rose along with broader market gains. These stocks have been hurt by the sharp rise in interest rates over the past 6 months. While falling mortgage rates are good news, there's still a long way to go for the housing market, said Sam Cater, chief economist at Freddie Mac. The Federal Reserve is likely to keep interest rates high while inflation remains elevated and consumers will continue to feel the impact. The average mortgage rate is based on mortgage applications that Freddie Mac receives from thousands of lenders across the country. The survey only includes borrowers who make a 20% down payment and have excellent credit. But many buyers who have less upfront cash or less than perfect credit are paying more than the average rate. Inflation appears to be slowing. Investors saw lower than expected CPI October data as an indication that the Federal Reserve could make smaller rate hikes in the coming months. Mortgage rates typically follow the yield on 10-year U.S. Treasuries. When investors anticipate rate hikes, they take actions that increase yields and mortgage rates. The Federal Reserve's monetary tightening is having the desired effect. Although inflation data is moving in the right direction, the Fed has said it will not stop raising rates until inflation gets closer to its target of 2%. The downshift in mortgage rates over the past weeks has brought some relief to buyers. A buyer who bought a home at the median price with a 20% down payment at the median rate of 7.08% in the last week was looking at a monthly payment of about $2,280, according to Realtor.com. At a rate of 6.61%, the same buyer's payment would be reduced to $2,174. While the $100 monthly savings doesn't sound like much, the buyer would save about $48,000 in interest over the course of a 30-year loan. These savings prompted some homebuyers to accept and lock in a lower mortgage rate. Mortgage applications rose for the first time in 7 weeks, for both purchase and refinance applications, according to the Mortgage Bankers Association. Signs of slower inflation have pushed mortgage rates below 7% for the first time since mid-October, but with interest rates still relatively high and affordability reduced accordingly, median loan sizes are now at their lowest in almost 2 years, said Bob Broeksmit, president and CEO of MBA. Affordability challenges. Home affordability is still a challenge for many homebuyers. Mortgage rates are expected to remain volatile for the remainder of the year. And prices remain high in many areas, particularly where there is a very limited inventory of homes available for sale. At the same time, inflation and rising interest rates mean that many prospective buyers are confronted with tight budgets. For consumers, the rapid rise in prices has created significant financial pressures, especially as inflation erodes wage growth. The Fed's rate hikes are directly related to higher interest rates on credit cards and car loans, which together with higher mortgage debt are putting additional strain on household finances. According to Realtor.com, more than 20% of listings have seen price drops as sellers adjust their strategy to find buyers in a changing financial landscape. On one hand, sellers have come to terms with the fact that the house prices we saw in the housing market when interest rates were at 3% left very few buyers able to manage mortgage payments at current interest rates. On the other hand, buyers may be reluctant to proceed with transactions if they are concerned about the unpredictable nature of current mortgage rates. Mortgage rate volatility is not expected to abate anytime soon, creating uncertainty for both buyers and sellers. With inflation still above 7% and the Federal Reserve committed to further raising interest rates in the coming months, the mortgage market is not out of the woods. We may see interest rates recover above 7% before the end of the year. So what happens next? The Fed may need a confirmation that next month's CPI is telling the same story. Subscribe our rich finance, stocks, options, real estate and crypto channel for more. We need at least 2 back-to-back reports of this nature, combined with the Federal Reserve's recognition that the inflation narrative is changing. In my professional opinion, interest rates are not out of the woods just yet. They are also unlikely to move dramatically lower, as there is still plenty of economic uncertainty both in US and global financial markets.
Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now. If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist: stock investing, stock trading, option trading, real estate, cryptocurrency. Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now. If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist: stock investing, stock trading, option trading, real estate, cryptocurrency. Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now. If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist: stock investing, stock trading, option trading, real estate, cryptocurrency. Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now. If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist: stock investing, stock trading, option trading, real estate, cryptocurrency. Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now. If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist: stock investing, stock trading, option trading, real estate, cryptocurrency.